Hey guys, it is September 21st, the long awaited Fed announcement, 75 basis points or not, to be or not to be. I think right now it's probably already baking in that the 75 points will happen, but it's whether or not the markets are going to go one way or the other. I mean, it is really hard to say because we are between earnings season. And in fairness, even the Fed raises or doesn't, they do need more than one data point to make sense of this economic data that has been, largely speaking, at odds, pointing in various directions. And then you've got all the uncertainty as well globally. Now, because of the fact that anything I say today is going to be largely unimportant, given everything's going to have to be processed on what the Fed has to say. I do want to go through General Mills, which reported earnings this morning and does have implications and a few different little signs that you could potentially use as you're thinking about global macro and what's going on in this world. So let me go very briefly through. I'm going to share my screen. Past performance is not indicative of future returns. And if you have a look, the indices have more or less been green for most of the day, about 50 basis points. So not too much one way or the other. Crude has been plus or minus. I think it opened fairly strong and then decided to wither away as the day moved on. On FinViz, you can see, let me just hit the return because at every given moment, you're getting a slightly different picture. But a lot of the big caps that have been really clobbered, Amazon, Google, and Meta, are showing flat today, not as much aggressiveness going on, just slight recoveries. You know how I feel about those. I have videos on pretty much all of them at this point. So just check out my channel on YouTube, Markets with May, to see more there. And then Amazon, obviously, is taking a breather. I think of everything so far, the arrows are not pointing great towards Amazon. But again, we kind of have to see what the quarter holds for us more than anything. I mean, this is just given how much stuff has come in, it's a little dangerous to be too short or too long, quite frankly, because we don't know. Let's see. The only other thing that we're going to point out today is after the Fed, we do have manufacturing coming out. And so far, that's been very mixed. Like one indicator is pointing up, one indicator is pointing down. So very, very hard to know. I really would, if he doesn't come out with something really solid to say, I wouldn't necessarily pile in if you get a rally because, we've gotten kind of a reversal on a lot of the Fed activity immediately after the following subsequent 2 days. So just be really careful out those markets. If you can, try to go to cash if you are more of a shorter term trader. If you're a longer term trader, I wouldn't necessarily lift your hedges, maybe back them up a little bit if you get an opportunity to do so. Okay, General Mills is one of the first packaged goods companies to report. And I've been watching it like a hawk because, as you guys know, I'm very bullish the ag complex right now. And there are nuances to pieces of the ag complex because despite having terrible weather, pretty much everywhere that you would be trying to supplement this grain and having a very, very high cost of fertilizer, et cetera, which, we're long. We just talked about CF yesterday, and then Mosaic we've talked about all along as well. It's just very interesting because the packaged goods kind of sit in between, and then whoever the packaged good folks sell to, those retailers then either are passing it through or eating it, or the packaged goods folks are eating it. So I'm interested in the entire supply chain as we're looking at it. Just to give you a sense, in 2021, we did have a beautiful tailwind in some ways, but then we had a massive headwind of inflation on food cost as well. But in general, spending hasn't been any kind of major issue. And I want to show you, we can see that continues to be the case with CPI. CPI, Consumer Price Index, we are seeing huge increases in food pricing, both at home and in restaurants, but really more at home than restaurants. And that's a curiosity in a lot of ways if you think about it, because you would think that if prices rose at the food you're eating in your house, that they would rise just as much or even more in the restaurant area. And that's just not the case. And we see more of that, very interesting, in General Mills numbers. Now, retail sales, though, tells you that people would keeping along with this. They're not really having any kind of meaningful problem with paying these prices. We can also see if we look at the X food and energy. So interestingly enough, it should just give you food and then X food, you think, but no. But you can kind of derive from this that when we take out food, retail food services total, when you take out everything else, you still get a very strong number up here as well at 9. So that is kind of interesting because despite pricing increases, you are still getting sales. It's a little bit muted, but you know, people are eating. They're reallocating their income spent in other places to food. Now, in general, this was the industry that we were seeing 2021. These are stale numbers, but 2022 is still being kind of processed, I guess, by various folks. But we were still looking at like an uptrend in general on food, both in the packaged foods markets, and I'm gonna put the pet foods on here because this is a portion of General Mills. Packaged food to be differentiated from buying non-packaged food. Very, very different environment that we're seeing in the two, but nonetheless, packaged food I think is benefiting as much from the stay at home because even if you are not eating out for lunch or if you're staying at home, um, you are therefore purchasing usually prepared meals because rarely does a person have time to do something too elaborate for lunch if they're still working from home. That's kind of what's going on here. Pet food is a rising category for a lot of the packaged foods companies. And I kind of want to show you what's happening at General Mills. Now, the General Mills story, they took a strategy early on that they were going to try to uptrend everything that they do. So actually, for those of you who are not familiar with General Mills, these are kind of the brands. I've created my own categories because their categories are a blend of a long geography line as well as what it is. But if you can think about it in the prepared meals, these are some of its prepared meals areas. Ingredients, they own Bisquick, Pillsbury. These are all things that y'all know and love. Cereal, snack bars. They've been growing the pets business aggressively. They purchased Tyson's pet food business at $1.2 billion, and that transaction is now closed. And then yogurt and ice cream. But everything that you're seeing here on gray in my screen are things that they've been divesting. So General Mills, very aggressively in the last 12 months, this is, if you're looking at it fresh, what I really want you to know is that you're going to want to really read this acquisitions part and understand the numbers from the fact that you've got so much going on. TNT Crust is a new brand that they acquired out of Missouri. They do pizza crusts and prepared pizza. The nicer version, if you haven't been to a supermarket to know this particular brand. And they sold out of a lot of Europe. Okay. So it's a very specific strategy that they started to undertake last year. And I got to say, it's working really well. Let's just talk one really brief thing. Let me just put this in here. General Mills does have about almost a 3% dividend yield, even with the rise today. Now, there's not really a lot of talk about raising the dividend or stock buyback or anything because there are some things in the go future that they just want to provision for correctly. But because this is a decent dividend yield, and it's a fairly stable company, this one is going to get a lot of attention here right this minute. Okay. So it does trade on the lower end, I would say, of its range. It's trading at it's kind of the middle of the range, 18 times, 13 times. With some of the earnings report today, those numbers will transition a little bit. So I would say it's neither expensive nor cheap. And the growth story we're looking at is reasonable for it. There's a lot of pass through of cost, but I just want to show you this is what they did on the quarter. On a blended rate, it was up 4%. Okay. But the operating profit was 10%. So margin expansion. Okay. On EPS, my goodness, sometimes I feel like I have all the right things until I then present it for you guys. On EPS, they really knocked it out of the park. I believe it was up 30%. It was really fantastic earnings report, and they did it off of just operating better. But in a lot of ways, it was a lot of those acquisitions. So they got a much better mix. They are actually anticipating about 14% inflation on the go forward, which was very important for me to know. Here, let me get to the notable comments. 14% inflation in raw materials. I'm long wheat, as we've talked about before, wheat, corn, and soy, but they are not anticipating a lot of promotional activity, which is also helping them. Apparently, inflation does decrease the amount of promotional activity they have to do, particularly in a supply-driven inflationary environment, which is what we're experiencing. And then on the pets business, which is becoming an increasing component of their business, here you can kind of see here, the pets business is growing increasingly here. could see. That's almost a 20% increase in sales. That they never have to really promote at all because that's not the nature of that business. We've got a good balance sheet. Inventories, which I unfortunately don't have up on here, we're up a touch, but it's really only $2 billion in inventories. They'll sell more than that each quarter, so it's a non-issue. But I found that very interesting, that they will probably all be absorbing any kind of inflation directly because they will pass it straight through. That will make the operating margin look a little tighter. I believe they suggested it look 200 basis points. It might look weaker just because sales are growing. Operating is growing off the component that they don't mind pricing through, but the part that they're not going to make us eat, you know, they're not going to take extra pricing on. Anyways, you can kind of see that even with wheat here at 950 on the Kansas City futures, you know, there's definitely room. So whether that 14% is right or wrong, that's a thing. But I am intrigued by the fact that they have more or less exited Europe as part of their strategy. And with that, I will stop the share and take any questions on General Mills or otherwise. How's it going today, David?
Hey, May, I'm in New York.
I know we switched places. So I'm in the warm, humid climate, and you're in the
such a great place. Melting pot.
Yeah.
But you walk a lot. It's so fun.
You do walk a lot in New York. That's true. Yeah. It's it's weird because when I come out of New York, I'm always like, oh, I got to drive to places. What do I do? It seems like it's close enough where we could walk, you know. But
anyway, this guy from Investor Place wants to interview you. So I'm sending your information.
Cool. Thank you. That's wonderful.
Okay.
I always like collaborating with other people in any way, shape, or form. How is it over at the conference? Is everybody really confused and holding their breath on this?
No, I mean, Ray Dalio is here. Michael Saylor. I mean, big player.
Wow. That's a good conference. And that just came from the Wall Street Journal, right?
Yeah, I guess Wall Street Journal owns MarketWatch.
Yeah. I didn't realize that either, but yeah. Cool. So you're focused on that. So we'll keep it quiet anyways in front of this. But General Mills had a really constructive quarter, but it really seems to me like the US, I mean, my bottom takeaway more than anything else is they're anticipating inflation. So if it goes over 14, that's painful, but that's what their economists are saying, which is very different from what other folks are saying, at least as relates to food. Remember, they're only interested in food inflation, and all the other stuff is less important to them, and maybe energy to a lesser extent. And they skedaddled out of Europe, which I think was smart, for lack of a better way to do it.
Very.
Yeah, you got. I give them credit. I'd get out of Europe too. I don't think they can figure out what the wheat cost is going to be in Europe, and they got so much cereal, and you know, you got to feed cows if you're going to plan on getting milk out of them. So you know what I'm saying.
Yeah. Also, energy seems to be. I mean, it's here because the cash price is down.
Yeah.
But I mean, as winter comes along.
So they agree with us as far as like you can only play this energy game for so long. Ray Dalio is a smart man. He's really good with the global map. He's probably one of the best macros out there.
They're up like 35% this year.
Good for them. Good for him. He had a weird year the other year, which I thought, and then people were really piling in against him. And I'm like, I don't think you guys appreciate how smart this man is. But like, yeah. That's good to hear.
Cool. Okay. Thank you, man.
All right. Well, it's short today so people can get the FOMC. Have fun in New York. See you later.
Bye.
Bye.